New Providence Acquisition is a SPAC or special purpose acquisition company for AST SpaceMobile. Let's talk about a couple of ways that we can take a position in this very interesting company. I'm Doc Severson. This is the Ready, Set, Trade of the Day for Thursday, the 7th of January. Let's start by bringing up the chart of New Providence Acquisition, or NPA. You can see that, like most SPACs, it sits around $10 until they announce what they intend to be doing, or there's a rumor about what they intend to do. When the actual announcement comes, this is usually when the price peaks, and this is when people ape into the position, which is a huge mistake. So now that the position has spiked out and retraced, let's evaluate whether this is a good buy point. Typically what I'll do with something like this is apply fib retracements to get an idea of just how far back it actually has pulled. So I'm going to take this swing from the bottom where it started up to the very top of the price. And what I'm going to look for specifically are three fib retracements: 38.2, 50%, and then 61.8. And you can see how the price has come down to and has found support at that $12.50 price point, or right around the 61.8% retracement. Typically, if the price finds support as deep as 61.8 and then starts to rally from there, it's a good trade. On the other hand, if the price undercuts 61.8, then likely it's going to fill in the entire triangle, which is formed by this. So this is a very important level here at this 61.8% fib retracement. It appears to be holding. So at this point, this is not a bad entry. So the one way that we could take this with a stock position on just NPA proper is to factor in the position size based on the risk of the current price, which is about $12.94. And if the price undercuts that 61.8%, starts making new lows down, say, $12. So maybe about $1 of risk in the position. And I would use 2% of my account size to be able to size that position so that I no way I'm going to lose more than 2% of my account on any one position. So if I have a $1,000 account, I know that 2% of that is going to be $20. So that's what I want to limit my risk to being. And so if I have $20 of risk to play with, that's about a $1 price movement between about $13 a share and down to my stop at 12. So what that means is that 20 divided by 1 means that I can use 20 shares with a $1,000 account. Now there's a different way to trade this with a little bit more leverage, a little bit more bang for the buck, and that's using the warrants. So I'm going to go over to the ticker symbol and type in NPAWW. This is the warrant for New Providence Acquisition. Now you can see it is about the same chart as NPA, the stock itself. It's just a little bit cheaper. In fact, it's quite a bit cheaper and allows you to get more bang for the buck. However, there is the risk that if this SPAC goes on for the next couple of years and never finds anything, you might find that the value of this is closer to zero. So this is what I'm going to do, is that I'm just going to assume that the price of this could go to zero for the risk. So this would be the entire position. So if I want to limit the risk of this to $20, what I'm going to do is divide it by the current price of 346. And what that means is that I can get about 6 warrants for that. So I can buy 6 warrants for this. It's only going to cost me about $20 of capital, and I'm not going to have a stop on these warrants. I'll just let them go, see if they can pop, and maybe get 100% return, and then I'll sell into strength. And that is it for today's Market Minute. Thanks for listening. We'll see you in the next one.